Okay. So the first thing I want to talk about is Amazon. So first thing that you noticed is that we opened up on Amazon today and we had this peak volume come in at about 9:31. After the peak volume, we could have entered in on this bar to play up to the moving average. Now we know that our moving averages are our resistance points. Okay, so this would have been the area that you would have basically locked in your profit. This isn't a huge move, but it's enough for like a small scout. Also, once you hit this point up here, because we know that this is low demand, this would have actually been a good area to short. Okay. And I think you pretty much know that because look at the demand volume, extremely low. So we would wait for a confirmation bar start to form here, okay, to take our short entry. And then once that came in, we could have rolled that down back to here, in which this would have been the peak volume, okay? So we would call this PV, okay? So this would have been PV here. All right, and then again, we could have taken our entry, our next entry long, right off of this peak volume. Okay, so basically, you know, as we're taking trades, we're basing everything on the balance or imbalance of supply and demand. So normally the imbalance occurs when there's either peak volume or there's low demand. Okay, so you either peak or low. So as you can see, peak volume, it rebounded. Low demand, it fell. Peak volume, rebounded. Okay, and we could have held this one all the way up to here, in which this would have been peak volume, okay, to the top side. All right, and that's based on the volume here. Okay. Any questions on that so far? Do you understand that? So just to reiterate everything, our first trade that we could have taken today in Amazon would have been here based on the peak volume. As soon as they opened us up, this immediately came in and boom. Okay, that would have been our peak volume. Afterwards, we bounced. We would have exited here on this no demand bar. Again, you would know that's no demand based on the low volume here. Next, we bounced up. And after that no demand, we could have taken a short. And our short trade would have been confirmed by this red bar here. And we would have taken this all the way down to the peak volume here at this point. After this peak volume was reached, we could have taken another long trade here. Okay, based on the peak volume, we wait for the green bar confirmation, okay, and we take that long. And we would have taken that all the way to the top here, again, which would have been peak volume, okay? So let's draw in our resistance lines, okay? And this would have been our next resistance line here now. Okay, so that's two successful trades on Amazon we could have taken, all right? And that's pretty much it. That would have been a nice bag on Amazon. Let's look at Zoom. So Zoom, I kind of got shaken out this morning, bro. I'll be honest with you, man. I probably should have stayed in this a lot longer than I did, or potentially re-entered. I know a couple of people stayed with Zoom here. Let me just clean this up for you. So now, right off the bat, you were waiting for peak volume, which actually came in right here. Okay, so that was our peak volume for the morning. If you guys are just joining me, I'm just reviewing a couple trades from today. So this was our peak volume from this morning, and we know that based on this here. So I did mention get into Zoom this morning. I don't know if did any of you guys actually hold here? Because I kind of got shaken out a little bit here on this down move, in which I probably should have held, because as you can see, the thing was up almost 20 bucks today. Sick move. Anyone hold Zoom today or no? Hello?
Oh,
Okay. Okay, so here's our peak volume, PV. So we would label that here. So again, like we always know, peak volume is an area that we want to look to potentially take a short if it gaps up. And if we look at our, let me see, if we look at our examples from our screenshots, we already know that this peak volume looks similar to what we have here. So let's just take a look here and see. All right, so we got this here and we got this peak volume here. So let's go look at this here. So if we look at the screenshot compared to what actually happened on Zoom today, you can see that peak volume. If you compare the two here, you see how this is similar to this? The only thing that differs is that this came in on a red bar, okay? So basically, again, they hit you with the peak volume this morning, like they did here on the screenshot. So the reason we use these screenshots is because the screenshots basically show us all of the potential moves that the operator is going to make. Okay, so if they gap us up, we look for specific moves such as this, okay, in which they hit you with peak volume, and after peak volume hits, then we can figure out which the next move would be, which is normally they pull prices down from there. Okay, and as you can see here, they actually did the same move on Zoom. I just fucked up on this, I'll be honest. I had way too many stocks I was following today. I mean, I'll just be honest with you, man. I kind of, I'm probably going to cut back the number of stocks to maybe like 3 stocks and just keep it at that. That way it's a little bit easier for me to manage. Because I really should have caught this move here. I'm kind of just like kicking myself in the ass right now. Because this was a textbook move. You see the peak volume like it did come in here and basically drop like that. So, I mean, I don't really have any excuse. I should have caught that move. You know, I was looking at too many stocks. So tomorrow, moving forward, I'm only going to cut it down to about 3 companies so I can manage looking at them all and get more precise and better entries on that as well too. So in any case, you can see he basically did the same move. He pulled the stock down here and then boom, as soon as we hit the peak volume to the downside, like he did here, and we can label this PV for this red candle. He took it up. Textbook move, man. I mean, the thing about it is, guys, if you see these things, man, don't be afraid to call it out. I mean, I only got 2 eyes. I only got 2 eyes. So I mean, if you guys see this setup here with the peak volume, say something. You know what I'm saying? Because these are moves that we could have potentially, like, there was no reason why we couldn't catch this whole move on Zoom. Seriously. This is ridiculous, honestly, man. Like, this is the same damn move. This is the exact same move on Zoom.
That was like 20% today, huh?
Huh?
That was like 20% today, huh?
Yeah, but that's what I'm saying, guys. You guys gotta, man, you gotta help me out. I mean, like, I only got 2 eyes. I mean, I've taught you guys all of the moves. You got the screenshots, man. It's like, if you guys see this happening, say something. You know what I mean? So you can catch it. Because I got like multiple stocks here. So I'm like, yo, if you guys see something on here, don't be quiet. Like, I need some more group participation. You know what I'm saying? Like, I'm seeing too many people that are just quiet in the room and nobody's saying anything.
Yeah.
Like, the reason I set this up is because I wanted everyone to participate. Because if we all participate, we all can profit. But if I'm the only one who's saying something and there are tons of other moves and nobody is saying anything, how is that helping us? I mean, come on, guys. I want everyone to profit, but I need you guys, if you see these moves happening, you see the screenshots, I went over the videos like 3 times, that you guys should know what to look for already. So, I mean, tomorrow, you know, if this happens tomorrow, can you guys please speak up so we can get some of these profits, get some of these bags. All right, so let's work on, can we work on that for tomorrow?
Oh, yeah.
Is that asking too much or no?
Nah.
Yeah, everyone agree that we can try to do that tomorrow. I'm not trying to, I hope I'm not asking too much. All I'm asking is that if you see a setup that I miss, okay, or if you see a setup that I'm looking at, be like, hey, Lamont, look, that's peak volume there, bro. You might want to take a look at that again.
Team up, team up.
Because if you see something that I overlook, that helps me because I could be like, okay, wait a minute, let me go back and double check. Because there was no reason why we could, this is the same damn setup. I mean, look at this shit. Like we literally should have caught this move.
Are you talking about when it's overextended?
Well, I'm talking about as far as, okay, were you in the chat this morning?
I was not. That's why.
Okay, so this morning I had Zoom, I had Amazon,
Mm-hmm.
Netflix, and I think Roku.
Yeah.
So initially I said get into Zoom, right? Because I saw that we bounced and I saw that we were pushing up.
Okay.
But we exited because this was here. This peak volume was here, just like they did here.
Yeah.
The thing about it is if you see how they pulled it back, they
Mm-hmm.
pulled it back and the peak volume appeared right here near the moving average. And then the next green bar, which would have been here, was the confirmation to go long. And it was, I saw it out the corner of my eye, but I was kind of looking at, Roku and I was still looking at Amazon. So we missed this whole damn move, basically. You know what I mean? So it's like, I'm just trying to get the team, work together so we can all mesh and we can catch these type of.
I'll add Zoom into my watch list because I didn't have Zoom on my watch list at all.
Okay.
Yeah, me too. I'll do it too because I didn't have it.
Okay. Cool.
Yeah, I honestly didn't have it at all. Yeah.
Okay, so that was the move on Zoom. So I mean that shit happens. You know what I mean? I don't doubt that we'll get a bag tomorrow, but let's
Yeah, I feel you.
yeah, let's just be more aware, guys, so we can catch these kind of moves. Okay, Roku, we caught a move on Roku today. So Roku, same thing they did. Look at this. I mean, it's like the same textbook move. They do these moves similar. Same setup here, guys. Here was the peak volume. All right, see they hit you with that right here. And then your confirming bar to go short would have been this red bar right here as soon as it started to turn downward. All right, so when I mean, the reason I give you these screenshots is because they work. I mean, he does the same moves. The only thing that's different is the setup. But normally, if he gaps it up, he's going to run it up to a point where there's peak volume, okay, which is this bar right here. Now, it may be green, it may be red, it doesn't matter. It's the fact that matters is that it's peak volume, PV, right? That's what I'll call it, PV. So if you guys see that PV, say, be like, look, there's peak volume. Pay attention. You know what I'm saying? So we caught this move. We actually caught the reversal on Roku today. I actually was able to catch that one. So basically, here was the peak volume. This was a good short. Didn't take the short, but the long play was actually here, which I call this long play from here.
Correct.
And actually, a lot of people rolled this one higher on Roku. So the long play started really right here, and you can see, look how low the supply is right there. Boom, he bounced it up. You could have unloaded some here at the peak volume, or again, if you wanted to hold some more, you could have held. I held right up until here. Kind of exited, and then he broke us out again.
Correct.
On that next up wave.
Yeah.
Anyone catch Roku in here?
No.
I didn't. I don't.
Yeah, catch Roku. Okay. Okay, but that was a clean move on Roku we caught this morning. So that's another. That's what they do. Same setup.
All right. What do you think about Apple?
Apple. Let me see. Let me ask a question. Do you guys understand the method behind this peak volume, or do I need to like go over that again? Does everyone understand how that works?
Go ahead. Yeah, go ahead, my man.
A little vague for me. I'm having a little trouble.
Okay.
All right.
Go over
So,
Lamont, bro. Yeah.
Okay. Who is okay? So let me show you now. let's go back to, let's see if we can use Apple for an example here. If there's a this.
Okay.
Okay, here we go. Perfect.
Cool.
Now, let me find the screenshot for this one.
You got screenshot for everything, bro.
We got screenshots for everything, man. I'm telling you, when I say we are stalking this guy, we stalk this guy like it is nobody's business. All right, so let me pull up the screenshot for this.
For sure, for sure.
All right, give me 1 second.
Damn,
So,
how do you remember everything? Where all your screenshots are, bro? Damn.
yo, I'm telling you, man, we got him. If he does it, we got a screenshot for it.
For sure.
Actually, we might. Let me see. Which one is this? Which one is this? This is sort of similar, like this actually might be a new move that he pulled in, but I'll show you this one because it's kind of similar to this one. Okay. All right, so check this out. So when we talk about peak volume, okay, the peak volume just basically means that at that point is the greatest point of imbalance.
Eating that he's doing.
Okay, so I don't know who has that background noise. Kind of so the peak volume would represent the highest amount of supply or demand. So when the market first opens, that's usually when you see the highest either supply or demand. Now, important to know. Let me pull this up for you. Now, when we talk about Microsoft Paint, when we talk about demand, okay, so demand or peak supply happens when the market first opens. The operator has pent up order that he has to unload. So when we're talking about pent up orders that he has to unload, the day before, he gets a lot of order flow from all of the different brokers. These are buyers and sellers. So if there was a lot of buyers and there was some good news, he'll gap the price up in the morning, right? But there'll come a point to where that basically it starts to, the momentum dies down. Okay, so the momentum, you'll know when the momentum dies down because that will actually be the peak area. And it's usually on the highest amount of supply or demand volume. Now, if he gaps it up, number one, if he gaps the price up on peak demand, that is the highest. Let's say that's the point of imbalance in the market. Okay, and what we like to do on those is we usually like to short those. So for example, right here on Apple, as soon as we see the peak here, the peak volume come in on, took about 1, 2, 3, 6, 7 bars. It won't always take 7 bars. Sometimes it might be 3 bars, sometimes it might be 2. It doesn't matter how many bars it is. The fact is that you're watching to see that this is the highest amount of volume, demand volume in this case, since it gapped up. So what you do is as soon as you see that, you draw your horizontal line here, okay? And this is the point of reference. So what we do now is once we see the peak volume, we wait for a red down bar as confirmation to short the stock. Okay, so again, this rule only applies if we get a gap up. Okay, so if he gaps us up and the stock is running, and then you see the peak come in here, all right, this is the imbalance. So naturally it has to correct itself. So the way it corrects itself is by falling to the downside. So we would initially go ahead and take a short position right on this next bar here. Confirmation. I mean, if you go back and watch our videos, that I have put together, this is basically the strategy that we use to
Correct.
make high returns.
Hmm.
I mean, there's not a person in this room who can disagree with me because we've all seen me do it live. We've called it live. We've got the gains. It's just a matter of you being able to pull the trigger and not being scared.
Well, today, this morning, did it kind of gap up or it didn't really gap up?
For Apple,
Or today, just in general?
for the most part, it did gap up.
It did? Okay.
Yeah, but we kind of pulled back.
It was
After
a
that.
quick pullback. It was like a really quick pullback. That's why.
Yeah, that's what I was saying in the room. I said that they would pull us back a little bit, but I didn't think that it was going to hold. So if we look at Amazon, for example,
Mhm.
all right, so Amazon, this is what they did for Amazon. Amazon actually gapped us down,
It did it. Okay, okay. It gapped
but the peak volume, here was your peak volume here.
Mhm.
So the thing about it is that this was a nice move, but the move was so tight. It was like this bar was really, after this bar came in, this move was pretty much done.
Yeah.
I kind of didn't press it to the long. I wanted to add up right here, but it was like this moving average over here kind of was like kept me away from it,
Correct,
from like
correct.
really adding to my position. And
Yeah.
that's one thing you guys want to make sure of, because if you got this moving average this close to the price,
Mm-hmm.
you only got maybe 1 or 2 bars worth of
Yeah.
a profit that you could take, because 9 times out of 10, usually when he tests the moving average the first time, it's going to get rejected.
Correct.
I had a quick question, Lamont. You know, for the rolling average, you said 20 and 200-day average, right? Is that what it is?
Yeah.
How do I pull those back up again on the thing? I was looking for the under the indicators, I guess. And I was doing the average, but how do I get both of those set up again?
Okay, go to indicators and strategy, type in moving average.
Moving average.
Okay. And it'll be this one right here. It'll say moving average.
Yeah, I got that one.
You have to click. Yeah, you have to click on it twice to bring up 2 of them.
Yeah, I'm here, Andy.
And
Okay.
it'll automatically do 20 and 200?
Yeah.
No, once you pull it up, you have to then go to the settings, and you have to go to inputs, and you have to put in the length for 20 and for 200 for each one.
Perfect. I got it. Thank you.
Cool. Yeah, so like I was saying, guys, it's kind of like all of you have those screenshots, right? I pretty much posted the screenshots to the room. So what you want to do is, depending on how they gap us up in the morning, all you have to do, guys, is if you want to determine whether or not you're going to take what position you're going to take, just bring your screenshots out and just look, compare the move to what you see. So if you see that he gaps it up, go through your screenshots and see where the screenshot is where he gapped the price up. Wait for that same setup. The thing is that the only thing that's going to be different is the amount of time or bars that it takes for the move to play out.
Right.
The actual bar that the move plays out on. That's the only thing that's going to be different. But other than that, everything else is the same. Peak volume is still peak volume on a green candle or on a red candle. It's the same shit. You see what I'm saying? So there should be no reason. There should be no reason why you're not getting in these positions early enough. There should not be a reason why he's fooling you so early in the morning. Like literally, like the early morning is your best bet to get a position and make some money.
I usually wait for like about 5 minutes before I get in, just to see where the direction is going.
Yeah, it could take 5 minutes, but you can see here it took 3 minutes. So it's kind of in that it's either that 2 to 5 minute range.
Correct. Yeah.
You don't want to wait too long, because if you wait 5 minutes or longer, then this move has already occurred.
Correct.
And take puts down here, you're already close to the peak volume to the downside, and that's how you know they're gonna bounce it. It's another thing. Let me put this on here. Number 2, you know the operator, okay, is going to reverse prices to either the downside or upside, depending on if peak volume forms. So what does that mean? So for example, if you're in a short position here and you start to see the volume building, okay, when you see peak volume appear on the downside, if you're short, he's going to bounce the price. So you better lock in some of your profit. Happens, I'm not bullshitting you. You don't understand like how many times I got fucked because I was like, yo, I'm gonna hold this thing, turns around, this thing bounce, it does a full rebound, and I lose from 70, 80% profit to like 5%.
Yeah.
I'm not paying attention. Like guys, the wave is the key here. You cannot get any, like I wouldn't even bullshit you. You see the results, man. The wave is the shit. So if it's showing you that if you're in a short and it's starting to build to the downside, you need to start to look to lock in your profits. Same thing to the upside. If you see that it's starting to build, I'm not saying close out the entire position, but maybe if you got 4 or 5 contracts, you got, maybe take off half.
Yeah.
And just play with the house's money. Sometimes on that first wave, they may pull it back a little bit, but then this might not be the peak wave here. So with Zoom, it was so strong that those down waves were almost non-existent.
Yeah, it was non-existent at all.
And then this wasn't even the peak wave. Well, this was the peak wave, but it didn't stop moving till up here. You see what I'm saying? This last wave. So again, I want to repeat this, and I'm trying to drill this into your head that the volume is going to let you know when you need to close out your position. And you have to get the position, try to get in as close to the peak volume as possible. Okay, based on the confirmation. Now, I want to tell you that this guy can trick you sometimes, because what he'll do is sometimes, let me clean this up. Sometimes what he'll do, all right, say he'll hit you with this, right, and you see peak volume, but sometimes, let's just say on this next down move right here, let's just say for this here, sometimes you will see low supply, and what he'll do is he'll do a move like this. I've seen him do this before too. He'll take it up, he'll take it down on low supply, and then he'll take it up again. And your time to short will be on this next up wave. Okay, I've seen him pull that before. So, and I'm sure you've probably seen him do that too. So he'll pull it up here. You think, okay, this is a peak wave. I'm going to take the short. And then all of a sudden, as soon as you get in short, your demand is decreasing. And then he takes this shit right back up again. Okay. And then boom, this is a wave that he takes it down on this next up wave.
Mm-hmm.
So you just hold through if that's the case, basically.
Yeah, but that's what I'm saying. He doesn't, you'll know whether or not he's going to play that trick on you if you see the volume decreasing. Now, if you see him dropping this and your volume is increasing, then you know this shit is going to continue. If you see him pull this and you see that the volume is still low, that means he's going to retest it and he's going to pick it up again.
Well, one thing that I learned for since trading is that by looking at the thrust, like how you always mentioned before.
Mm-hmm. How shortening of the thrust.
Yeah, the thrust.
You see, but the good thing about it is, guys, is by having these meetings, we're covering all of his potential moves. So there's only so many moves he can do. Either he's going to take this down on increasing volume, or he's going to take this down on low volume, back up again. That's it. Those are the only 2 ways he's going to play this. So if he wants to take it down, okay, with increasing volume, then you go ahead and press your short and add to that short once you see the volume increasing until we get to a peak. But if he wants to take it down here and you see that this is starting to decline and he's going to take it up for a next wave, you might want to go ahead and just take that quick loss right there and then try to reposition on that next up wave, because that next up wave may be the low demand. You see? Does everyone understand that?
Mm-hmm.
Yeah.
Because that's probably like the shoulder. That's why.
Exactly. Yeah. So you'll see that, and then probably get
So when
that.
you say,
And
Lamont,
go ahead.
when you say peak volume, basically, right? Okay, so what justifies to say 100%? Okay, this is peak volume. Basically, it's the highest, for example, of demand, the highest green bar. Basically, that defines peak volume, and then it turns into red bar. That's when you say peak volume, or at what point do
Yeah,
you call this peak volume?
that's exactly what I'm saying. So it's peak volume on the demand side if he gaps it up. It's peak volume on the supply side if he gaps it down. So if we go back to our examples again, so let me show you this example here of, okay, let me see, hold on, let me see what this, okay. So this is the example here. So this is peak volume on the downside, right? So when he gaps it down, you're always looking for peak supply volume, okay? If he gaps it up, you're always looking for peak demand volume.
And that's confirmed by seeing one of the opposite color coming in, basically, on the next one.
No, well, it's really confirmed by just observing how the bars move, the wave moves. Like if you're looking at it and you see that this is the highest one, well, yeah, you could say that. Yeah, you could say that. It could be confirmed by the next bar. You could say that. But I'm able to identify that as soon as just from observing it. You see what I'm saying? I could just look at this and say, okay, this is peak volume right here. Because the bars will be moving, he'll be moving up the price, and then because a lot of times, guys, this is like his best tricks. Like when he gaps it up on you, and he has you thinking that, okay, this is it, this is gonna be the time. And then you'll see this, and then boom, we come straight back down, and he'll pull that shit right back down again.
Right. Yeah.
So, you know, you gotta sharpen the eye skills, look out for that, you know. And then that way, when you see him setting up like that, you know right off the bat what he's trying to do. Because the key to this whole system and being successful at it is being able to anticipate. So as traders, we want to be anticipatory. We don't want to be reacting to what he's doing. We want to anticipate what he's doing. That's how we make those big gains. But if you're reacting, that means that the move has already happened. And there's a likelihood, but that the time you get into the move, there's a likelihood that he's going to pull the price against you.
Yeah.
That's just how it is.
Yeah. So for the shoulder part, how you just said that, I would probably take a short there. But once if it gaps down 2 bars and rises up again, then I'll probably take another short there without even leaving. Just that would be another strategy.
You mean, okay, so you're saying if he gaps it up, he tests it on low volume on the down wave, and he takes it back up again?
And I'll probably take another short again, two positions from there.
Yeah, I
So
see what you're saying. I see what you're saying. Yeah, so you would be adding to the position once.
Exactly.
Okay.
That's what I would do.
Okay, but just make sure you wait for this next wave to confirm that he's going to pull it down.
Exactly. Yeah.
Before you add to it.
So I don't take a loss that way. So.
Right. So what Andy's talking about is a strategy that I was really talking about kind of in detail, where basically we look to kind of scale into positions, assuming we see that he's moving price in our direction. Okay. So for example, let me look at like Roku, for example, right? So Roku this morning, assuming we took the long trade from here, say I said get in here, right? So see how he's starting to move the price here. If I see several bars, green bars, that are going in my direction, I'll usually go ahead and kind of scale in a few more contracts, since I know that the position is going in my favor. Okay. But again, you guys got to understand, when you're doing this, guys, you got to be quick, because this guy moves really fast.
Exactly.
The moment you sit here and you're waiting, then you're already on peak volume, and then he's already ready to pull the rug on you again. Boom.
Option 2.
You see what I'm saying? So you got to be extremely quick, and you have to be able to anticipate it. This is why I continually have these meetings for you guys, because I want to help you guys be able to see his moves, anticipate faster and faster. Like when you see him gap up, you see the peak volume, you automatically take the short. This should be something that comes natural. You don't even have to think about it. Like seriously, like the only time, the only thing that should take time is you putting in the order. Okay, you shouldn't have to think, do I need to short here? No, your brain should be like, okay, peak volume, let me get the short play ready. As soon as I see the confirmation.
Sorry, fellas, I gotta roll out.
Am I clear on that, guys? You guys understand that?
Yes. Yeah.
I understand it.
Okay, any other questions?
I think that's it for now. For me, I'm just
That's
starting to get to the point where I can see it. Let me ask you one other question. How often?
Can't hear you. What'd you say?
How often are you drawing the lines out? You said like you can draw the lines in the morning. I heard you saying the other day when it starts.
To be honest with you, bro, I mean, I only say that for new people because I want you to get in the habit of being able to look at the waves. Like once you get experience with this system, you don't even really need to draw the lines, because if you measure where the peak volume is, you can see already where the waves are forming. So if this is the peak volume and you see the down wave here, you can already see that he's pulling it down. And then once we get down to here, see this up wave and then the down wave and then the up wave again. So in actuality, the angles are to help with your eye coordination. But the real way that this system works is that you can track this just by looking at the waves at the bottom. Okay, once you become, Andy, does that make sense? Am I accurate on that?
Yeah, of course.
You see what I'm saying? So you can see.
I can see it. I don't need to draw lines. Like I used to need to draw lines, but like once you get used to seeing it every single day, it just your eyes get used to it.
Yeah. So boom.
It's starting to click a little by little to me. So yeah, it'll take a little time.
Yeah. So I mean, and it's on anything. Boom. Up, down, up, down, up, down on this one, up on this one. So I mean, it's going to come natural, guys. Just keep practicing. You know what I'm saying? But there's going to be a point when it's like, okay, you don't even need it anymore. You know what I'm saying? So, you know, tomorrow when we come in tomorrow, it looks like we probably may gap up tomorrow. So if we gap up tomorrow, make sure we look for the peak volume, okay? And just let it flow automatic, okay? So you already know how you have the screenshots. If you need your screenshots up, pull them up, guys. You know what I'm saying? It's as simple as that. Pull them up on your computer. I don't know, however you're trading, but just have them there. And just look for the one that shows the gap up so you know what you're looking for. You know what I'm saying? And then as you get in the practice of that, pretty soon it'll be second nature. Okay, and also, like I said before, if you see something, say something. You know what I mean? If you see the peak volume on a stock, or if you see me looking at something and I miss the peak volume, just call me out. Be like, hey, bro, don't miss the peak volume there. Okay, so we can get in on a couple of these moves, man, because we don't want to miss the next Zoom, bro. For real. That was a hell of a move today, man. For real. All right, so all right, let's get it tomorrow, man. Let's get this bag on a Tuesday and let's drain these fools, man. Come on. All right, I'll catch you guys tomorrow morning.
All right, see you tomorrow.
All right, later.